Hey guys, what's up? It's Kenya, and I am going to go over just how to help you perfect your entry, especially when incorporating market structure with the KISS strategy. So, really quickly, if you follow the KISS scalping strategy, you can find the entire playlist on our YouTube channel. If you go to playlists on our page, you'll see the KISS playlist. This scalping strategy is money. It works. I have a lot of people getting results with it. I prove my results every single day in our public Telegram. So here's what I want to point out to you guys. As you can see, I'm on the 5-minute chart of GBP USD. We just took a trade off of this. I'm going to show you my results. Right here, these are the 4 indicators that we use: the Bollinger Band, RSI, Stochastic, and MACD. Now, while we use indicators, we use them for confluence. It is not the very first thing that we look at, but I want you to see the setup. I always post this so that you can see the setup and exactly what to expect. But when you incorporate market structure, that's going to help you get the very best entries. So notice here, you have a perfect confirmation here where all the 4 rules meet right here. You have a little pullback within this structure level here, and then price takes off and hits our TP levels. So that's the 5-minute confirmation. So right when your MACD cross, now see the MACD brings us to the party a little bit late. You probably would have got in right when it crossed, which would have been right up in here in this candle where we already lost a few pips. But with market structure, you would have had more clues and could have trusted your instinct off of this level. So if we go here to the 15-minute time frame, you have your perfect confirmation here. And as you can see, once MACD cross, which the MACD is very helpful in showing us a change in trend, you have where price pushed off this level here and gave us exactly what we were looking for. So I usually have 2 tabs pulled up. I usually have the IMO Web Analyzer or my Trading View that shows the 4 different indicators. However, I don't need them anymore. Once you start to trade this strategy and as you learn Forex trading, you're going to become more advanced in your knowledge and you won't need it either unless you prefer it. I do like the indicators because I'm just so used to it. It's profitable for me, but I've also learned how to spot the perfect setup without them. So in my previous videos, I went over how to identify the trending structure. So we did that here with 2 parallel lines. So as you can see, we have a downward channel going here. And then you can see sometimes you're going to draw channels within your overall channel. So on the daily, we're in a downtrend. And as you can see, I have some levels marked. When you jump down to the lower time frames, it's going to look a little bit different. But I always like to evaluate the daily just to see how the market is trending. So if I know that I'm in a downtrend, however, if I jump to the 4-hour and 1-hour, I'm currently in a slight uptrend. As you can see, the market is making higher lows and higher highs. And so what we look for is for the market to pull back to our trend line to get the very best entry, okay? At a level of support or resistance. So resistance, we want to look to sell. So for example, these would have been perfect entries right here into our trend line and also close to a level of structure. So these little highlighted areas here. And remember, I pointed out in our trainings, you're really just looking for these peaks. Kind of like when you're looking at a mountain, you look for the peaks in the mountain, okay? These serve as just clues for us and levels of support and resistance as well. It's respecting our trend line. This would have been a great sell here. Also another good sell here, and you could have sold here, okay? So, and then look, price came here to our trend line, pushed off of our trend line, and that was a beautiful buy. So this morning, I actually called a trade, and we traded off of this structure level here. So let me move this. Actually, let me highlight this area here. So we took this trade right here, okay? So I called a buy on GBP USD at that level. And let me just tell you exactly why. So I know that I am in a slight uptrend. However, I'm keeping in mind that price could also push to this next zone. But we saw some rejection here. You see these wicks here? So wicks always tell us a story. It tells us a sign of the market possibly wanting to turn around. And as you can see in the past, this has been a very valid level of support that was previously resistance as well, that also showed price rejection in the past. So you see this here, look at all of this rejection here. So this kind of gives us clues as to what the market could possibly do. So one of the things that I do, instead of, let's say here where, so I'm going to switch over to the KISS indicator chart. So let's say around about here, let's say price is here, and you're thinking, well, I want to jump in right now. I want to help you perfect your entry. You don't always have to market execute in the middle of, where price is pushing up or pushing down. What I do is I set a buy limit or a sell limit at the best possible price. So if I saw that I had some rejection here in the past, I'm expecting possibly that price will return to this level and do the very same thing. So what I do is I keep an eye on it and I go ahead and determine, well, if I'm wrong, where will I set my stop loss? So I'm looking here and I see that, okay, you can do two things. You can set a stop right below this wick above right here. You can set a stop loss maybe about within 8 pips. In case you're wrong, then that's fine. But keeping in mind too that price could possibly push to this next zone right here at 2097. What you could do is lower your lot size very, very low. In case price were to push down into this zone, you can have another entry, and you can, because if you have a lower lot size, you can widen your stop loss. So for example, if you are trading at 0.01 lot size, which is 10 cents a pip, considering your balance, depending on what your balance is, you might can swing a 30 to 40 pip stop loss when you're aiming for a lot more than that. So it's just totally up to you and how you manage your risk. You and I could be in the same trade and have totally different outcomes. But basically, I just want to focus on helping you get the best entry possible. So as you can see here, we're paying attention to this level here. Also too, remember in the last video, or if you followed my market structure videos, I talk about impulse correction continuation. You're going to see this 1, 2, 3 movement a lot when you're trading within channels. So as you can see here, we have an impulse move on GU. So we had an impulse move right off of this trend line, followed by a correction into this structure level here, and then a continuation. So that's what also gave me confidence to take this trade. And I am going to show you exactly first. So we took this trade right about, actually, hold on, I'm going to share something with you so that I can show you the results of this trade. So I'm going to show you the results of this trade. So we took this trade off of, I told everyone in Telegram to enter at around 21.13 to 21.14 on a pullback. And I said, if no pullback, then we have no entry, okay? So remember, instead of entering right away, you can always set a buy or a sell limit at your target area. So actually hold on one second, I'm gonna share something with you. Let's actually go to our Telegram. So you'll see here, this is where I post a recap of every trade. I try to, I don't always get to do every trade, but if you're in our public Telegram, which the link to the Telegram is in the description of this video, you will see trade ideas that I drop for this strategy. So that way you can kind of see the ideal setup. If you go through everything I post in here, you'll get a feel of really good setups and what they look like and what to look forward to. But I posted GU, I posted the recap here. This one shows the indicators. Usually I'll try to post both that shows market structure and the indicators if I have time. But you'll see here, this was the outcome. So I entered at 21.14. This was a trade that I took previously before that one. But this is where I got out, although price pushed higher. I trade from zone to zone, and also if I sense a little like a pullback is coming, I'll go ahead and take my profits and either look for another re-entry, or I'll just be satisfied with what I gain. So that was the outcome of that. A lot of us profited together on that one. So guys, I just wanted to really go over this and just kind of, go over how to help you get the best entry level possible, and really how to trade off of these major levels. And just remember, you can always, if you If you lower your lot size and just use proper risk management, you can have more than one entry off of these levels if you feel that price will keep pushing up, especially if we had an impulse move here. We know that we have a correction and we're expecting a continuation. That can also give you leverage as well, and you can win more trades even when you're in, a loss. So hopefully that makes sense. I hope this is helpful. Comment on this video if you guys have any questions. I look forward to delivering more helpful training. Thank you guys for watching, and don't forget to subscribe.